Hello traders, module 2, video 7, finding a clear trading entry. Remember the previous video was about the trading setup rules, about trading setups after the top-down approach, and now we are going to find a clear entry. For that I'm using the Euro-Yen daily chart, and there we go, and I will not combine time frames right now. I won't do the top-down approach. I'm just looking for trading setups and then a trading entry. Okay, time frame combinations and styles like swing trading, day trading and scalping, these are videos for other modules, and in module 3 and 4 and 5 we will talk about all the time frame combinations that I'm using, and of course the top-down approach and the differences between entries on for day traders and swing traders. But right now we are just talking about setups and entries. As I said, the Euro-Yen daily chart. This here is the highest point on the chart. The price moves down under the 36 EMA. We get a crossover. The price creates a new low, and then it retraces back to the 36 EMA, creating here a lower high. So that is the highest point. The break of the 36. That means possible trend change, but we need a confirmation. That means the price has to create a clear lower low on the chart, and then of course a clear retracement and a lower high after the crossover of the 12 on the 36. That happened here. Draw your lines. Highest point here. The price creates a lower high, little one here, you can see that. Okay, and then that and this point 1, point 2, point 3. The price stays under the 36 EMA. It retraces back to the 36. It's trying to break it but cannot do it, and then it moves lower. So you see afterwards lower lows, lower highs, and again a lower low down here. Now a setup, a 1, 2, 3 setup should look like this, a good one. That means we need clear candles in one direction, in this case red candles, because we are looking for short trade. The trend changed to the downside, so that's a downtrend after that uptrend here. Price moves under the 36, so a downtrend, clear candles. Often people ask me how many candles should I see. It doesn't really matter as long as the market is volatile and you have, I don't know, 3, 4, 5 candles, red candles. It's okay. On average you will see the first move from point 1 to point 2 is between 5 and 15 candles. Okay, and then a clear retracement to the 36. Ideally that's what you're looking for. The down move, in this case the red candles, should be easy to see. You need to see candles closing lower than the previous candles, and the color should be red. In between a green candle doesn't matter, but the more red candles, the easier for you to spot the setup. And then the retracement, of course, in this case 1, 2, 3, 4, 5 green candles, nice big candles, so a nice retracement to the 36 EMA, and afterwards a bounce and the price moves lower. Now about the retracement, I say a retracement to the 36, so you don't have to use any tools like, for instance, the Fibonacci retracement tools. Some people like to do that. You can do it also if you like to you just choose the Fibonacci retracements up here, click on it, find the highest point on your 1, 2, 3 setup before, in this case, the crossover. That's the last small retracement you have here, some green candles. That's the highest point. Left click and leave the finger on the mouse, drag it down to the lowest point here before the retracement, and then leave it, and you see the retracement goes up to between 50 and 61.8%. yeah, and that's what you ideally want to see, a 50% retracement. My dog in the background agrees. 0.1, 0.2, 0.3, that's the retracement of 50%. So I use the 36 EMA, and I know if we have a smooth move to the downside and a nice retracement at least to the 36, then I have a retracement of about 50 to 61.8% usually. Yeah, you will get used to it after practicing. That means you don't need to use the Fibonacci tool at all. I hope it was not too difficult to understand. I do it again for you. This is your previous move to the upside on the daily chart. You can draw a trend line also. You have 3 touches here. The price retraces. Let me delete the 200 EMA so it looks easier for you. And again, the price creates a lower point on the chart, a crossover to the downside, a clear lower low and a lower high. You can draw your 1, 2, 3. You can start it from here, or you can start it from your previous first lower high on the chart before the crossover. It doesn't matter. Tell you the truth, you will get used to it with your practice a little bit. 0.1, 0.2, 0.3. That's how you draw the lines, right? From 0.1 to 0.2, you just connect the highest and the lowest part, and then from 0.2 to 0.3. In a short trend, you want to take the 2 to 3 line, that's how I call that line, from the lowest point and really slide it and drag it under the lows of your Heikin Ashi candles, so you can see the clear break afterwards. Okay. Now let me zoom in a little bit. There we go. 0.1, 0.2, 0.3. Here you have your 2 to 3 line break, and after the 2 to 3 line break, I mean the price breaks that line from 0.2 to 0.3. That's what I call the 2 to 3 line, and you see a new red candle. You have a 1 red candle before that also. Let me zoom in more. There we are. Again, 0.1, 0.2, 0.3. Your 2 to 3 line, a clear break of that line, and you see a red candle there. You have 1 red candle before that, but this red candle is not breaking your 2 to 3 line, right? 0.1, 0.2, 0.3. It tries to move lower after the bounce on the 36 here, but then actually you can see the open price of that candle. In the background we have the bar chart, remember, but the close of that red candle is higher than the open. That is not good, first of all, and secondly, it did not break your 2 to 3 line. 0.2, 0.3. Again, that's how you draw the line. You don't connect 0.2 and 0.3 like this, because you want to see the clear break after the bounce on the 36. You take the line from here and draw it under your Heikin Ashi candles. If you have a spike, only one, you ignore it. If you have more than 1, 2 or 3 or 4, then you can include the spikes and draw the line under the spikes. But in this case, you see there's only 1 little spike, so what you do, you draw your line like this. This way you see the clear bounce of the 36, and then the red candle here closing, opening over the line in this case, but it closes under the 2 to 3 line, and that is your entry candle to go short, to sell the euro against the yen. Again, 0.1, 0.2, 0.3, a crossover. The 12 is crossing the 36 to the downside. You have nice red candles in between, a green candle, it doesn't matter, but you can clearly see the volatility here. The price is moving lower, and then it's retracing. You get 5 green candles back to the 36. You can see that spike that indicates a clear bounce. The price cannot move higher. And then it's playing around on the 36, and afterwards it breaks your 2 to 3 line. The candle closes lower than it opened. Very important, the candle should close lower than it opened, and at the same time it's breaking your 2 to 3 line. Okay, now for swing traders we will analyze it in module 3 and 4, of course, but for swing traders, a close of that candle after your top down approach and everything, that would be your entry. As I said, we will analyze everything in the next modules, but right now this is your 2 to 3 line break, and the close of that candle would give you an entry to short the euro against the yen if you are looking for swing trading entries. Let's imagine this chart here is not a daily chart but a 5-minute chart. You have done your top down approach, and now you're looking for day trading entry. In this case, nothing is changing. Crossover 0.1, 0.2, 0.3. You can also take this green candle because the price broke the 36 and retraced to here, so you can also use that as 0.1. It doesn't matter much as long as you have a lower high as 0.1 at the crossover, after or before the crossover, that's okay. You need to see the clear break of a previous line, trend line, the crossover, and then 1, 2, 3. So as I said, let's imagine this is a 5-minute chart and you are doing intraday trading. It's still a nice 1, 2, 3, and then you also have to wait for 2 to 3 line break and a red candle, and after the close of that candle you would not enter immediately. You want to see the price moving lower a little bit first. So what you have to do is you wait for the 2 to 3 line break. The candle has to close, but then you wait for the next candle to open, and this candle should move at least 1 or 2 pips lower than the low of your 2 to 3 line break candle. So the second candle should move lower by 1 pip or 2 pips at least, and you don't have to wait for the second candle to close. It's enough if you wait for the candle to move 1 or 2 pips lower than the low of the 2 to 3 line break candle, and during the move, even if the second candle is not closed, you can enter the trade. That means you can go short here. Okay, that's the difference between swing trading entries and day trading entries. It means we need a 2 to 3 line break, but swing traders would take the short after the close of this candle. Day traders on lower time frames like the 5-minute chart would wait for that candle to close, and then they want to see the next one moving lower by 1 or 2 pips, and during that move they could enter, you could enter the trade. Okay, now if the next candle is not immediately moving lower and you have a green candle in between, and the third candle moves lower, you can still take the trade there. Yeah, but as I said, we will analyze all that in the upcoming modules. Okay, let's continue practicing here. That is our 1, 2, 3 short setup. Price creates lower highs and lower lows, making some nice profits in this trend, and then we see suddenly the lowest point, the price breaks the 36 EMA to the upside. It retraces back to the 36 EMA, and you get a small crossover here, and then it's sliding and it's crossing again. But this here is your first higher high again, and the first higher low. This low is higher than that low. Now you can also try to connect 3 touches. You can do it from up here and close to the 36. It would look like this. You have 1, 2, 3 touches there, and then you have a break and the clear 2 to 3 line break down here. You could also say, okay, I like to do it a little bit differently. As long as you have 3 touches, it's okay. 0.1, 0.2, extend the line. Then you have to change the angle a little bit. It would look like this. In this case, this line here, the price is not touching exactly that line, but you get the point, right? Both lines are okay. I prefer the lines closer, the touches closer to the price if possible. Then I get earlier entries. 1, 2, 3, almost 4, 5 touches there, and then I'll see a clear break. If the price is breaking the 36 EMA, it's the first sign of a potential trend change anyway, right? Now, again, 0.1, right now that's the lowest point. The price is breaking the 36, it's creating a higher point. It's retracing to the 36, also breaking it a little bit, but you can see the clear 1, 2, 3 setup. And now, because that is not a short anymore like here, that's a long 1, 2, 3, that means we are looking to buy now. Let me zoom in again. You connect 0.1 with 0.2, and then 0.2 not with 0.3 like this, but in this case you slide it, you kind of draw it over the red candles, the retracement candles, yeah, the highest points of these candles. This way you can see a clear 2 to 3 line break, and there you go. 0.1, 0.2, 0.3. This is your 2 to 3 line. The 12 is crossing the 36 here and here and again, here again, and a clear 2 to 3 line break candle. This candle is green now. It's opening lower here, and then it's closing higher over the 2 to 3 line, and it's a powerful candle as well, a clear 2 to 3 line break, and therefore a long entry candle. Swing traders now on the daily chart would look for long setups exactly there, okay, and intraday traders, in case this is a 5-minute chart, yeah, let's assume we have a 5-minute chart here right now, you have to wait for the 2 to 3 line break. Let me zoom in more. And the next candle should move at least 1 pip or 2 pips higher than the high of this 2 to 3 line break candle, right? Look at that. The next candle doesn't do it. The third candle is red, but it's still over the 36. It's not that it's breaking down like crazy. It's still trying, and then that candle moves clearly higher by 1 or 2 pips. So your entry would be somewhere here, yeah, 1 or 2 pips higher if that was a 5-minute chart, for instance. Okay, I think I explained it in much detail, and we will have many examples in upcoming modules, so don't worry too much about it. Now you draw your support line. The price moves higher, making a lot of profits here, creating higher highs, higher lows, higher highs, and then the 36 EMA breaks again. Draw your support lines. You need 3 touches. Support the price on this uptrend now. 1, 2, 3, and more touches there. Yeah, 1, 2, 3, 4 touches. Here you can see the price does not create higher highs anymore. 3 tops here, a nice topping formation on the daily chart, and then a break of the 36 EMA. And look what happens afterwards. Again, the same story. The price creates nice big red candles, breaking the 36 EMA. You have a crossover of the 12 and the 36, highest point, 0.1, 0.2. Draw your line now under the candles smoothly there, like this, and leave it as it is. 0.1, 0.2, 0.3, a nice retracement to the 36 EMA, a nice 2 to 3 line break. Here a green candle is breaking the 2 to 3 line. It should be red. The next one is red, closing much lower than it opened, and that would be, for a swing trader on the daily chart, an entry. Imagine again, that's a 5-minute chart, for instance. Then you would have to wait for the next candle to move at least 1 pip lower, so this doesn't do it. You also get a green candle, but then this one or the next one moves 1 or 2 pips lower. You have your short entry here. Now, in case you're looking for intraday trades, and this is a 5-minute chart. Okay, again, I say it again, we will analyze it in upcoming modules, okay, when we talk about the differences between swing trading, intraday, and scalping. We will also do all the time frame combinations and everything. But for now, remember, I'm not talking about stops and entries. This video was just about the setup and finding the entry after drawing a nice 1, 2, 3 setup, and also your support and resistance lines. If you have trouble understanding it, please watch the whole video 2 or 3 times before you go to the next video, okay? And the next video, of course, video 8, will be on how to place your trades and split your positions into multiple parts.